Welcome back to Trading with CJ, and today I'm covering a topic that was actually asked for by one of my subscribers. So if you also have any topics you'd like me to cover, maybe it's an individual stock or something to add to my Investing for Beginners series, feel free to leave that in the comments below and I'm open to any suggestions. So today we are talking about stamp duty on shares, and most people are familiar with stamp duty when buying a house, but it is also charged on buying UK shares as well. The stamp duty is basically a tax that was first introduced in 1694. However, it was first brought about on shares in 2003. And whilst this isn't one of the most exciting topics, it is nevertheless important to know, especially if you are buying UK shares. So what is stamp duty? Well, stamp duty reserve tax, aka SDRT, is actually its full name, and it's a charge of 0.5% on any UK share purchased electronically. So if you're using an online brokerage such as Hargreaves Lansdown, then it's going to add on a charge of 0.5% on top of that transaction as well. And if you are doing a paper transaction or a transaction non-electronically, then it's still going to charge you 0.5%, but on any transaction made over the value of £1,000. So let's show you an example here. I'm going to use Trading 212. If you want to use Trading 212, the referral link is in the description below. You'll get a free share with up to £100. For transparency, I would get one as well. So using Trading 212 here, I'm just going to go on to Aviva. Aviva is a UK insurance company. And if I was to purchase 3 shares of Aviva, it's going to cost me £8.27. And you can see it automatically adds on the stamp duty here because it is a UK share. And it's going to cost me 4p stamp duty. So it might not seem a lot, but obviously I'm only buying a very, very small amount of shares there, just £8.27. So it's going to automatically add on the stamp duty for me, and then Trading 212 will then pay the tax man my stamp duty fee. So although 0.5% might not seem like much, like I said, that was just an £8 purchase. If that was an £8,000 purchase, then we are looking at a much larger figure there that is going to be deducting from my investment. So obviously if you are trading much more frequently, then it's going to continually add on stamp duty every time. And if you are trading a lot more high volumes of cash, then it's going to be taking a lot more from you. Now, there are a lot of calls, and there have been for quite a while, to have stamp duty on shares abolished, and that's because it does create a lot of problems. It is reducing the UK efficiency of the market because it's making a lot of investors not want to worry about paying stamp duty, so they invest into overseas stocks. And second of all, you're having to not only raise the capital for your initial investment, you're then having to raise the extra cash for the stamp duty bill, especially if you are trading in higher volumes of cash. So when don't you have to pay stamp duty? Well, as a UK citizen, you do not have to pay stamp duty when buying stocks from overseas. So as an example, if I was to buy a US stock, then obviously that's the dollar. So I do not have to pay any stamp duty on that. But you do have to take into mind the currency exchange rate. The pound versus the dollar. If one day the pound is worth a lot more, then I could get a lot more for my money. And if another day it goes down, I could get a lot less. So you do have to take currency exchange rates into mind when buying overseas stocks as well. And you also don't have to pay any stamp duty when buying bonds or gilts, and as of 2014 you also don't have to pay on ETFs. It's worth noting as well that you only pay stamp duty when you buy shares, not when you sell. When you sell, that is capital gains tax, which if you're above a threshold then you have to pay that. That's a whole different subject. You only pay stamp duty on buying UK shares. So I hope you found this useful, or if you just want to help me out, please hit the like and subscribe to my channel if you haven't already. It is greatly appreciated. And like I said at the start, if you have any suggestions or topics that you want me to cover, whether that be about individual stocks or something in an Investing for Beginners series, drop it down in the comments below. I am open to any suggestions. Once again guys, thanks for watching, and until next time.